This episode is brought to you by Baby Ethereum. You may have heard of Ethereum, the Ethereum mining income token, but Baby Ethereum is a hyper-deflationary token on the BSC chain that provides great opportunities and rewards for Ethereum token holders. Baby Ethereum has gone from $300,000 market cap to over $5.7 million in 1 hour. Stake Baby Ethereum and get raffle tickets that enter you to win a 2022 Tesla Model 3. Visit babyaeth.com for more information. Link in the description below.
This my two Satoshis, who need 2 cents when they can get double from stacking Toshis, yeah.
Welcome to my two Satoshis with Default, coming to you once again with another market analysis video. Today we're going to look at the Bitcoin futures chart, and I'm going to explain to you why I'm expecting, more downside for the BTC price, and why I'm seeing, more downside for the overall crypto market. Starting off with the CME chart. If you look at this chart, you will tend to notice that we have what are called gaps in the price. This chart only trades between Sunday 6 p.m. Eastern time to Friday, I believe it closes at 5 p.m. Eastern time. So during the weekends, if you have, price action, either to the upside or downside from where it closed, you will create a gap in price. And if you know anything about the traditional markets, when you traditionally have a gap in price action, over time, that gap tends to be filled unless it's what's called a breakaway gap, which is like, say in this instance, Bitcoin was at 20,400, and over the weekend had a bullish impulse up, and it closed, say about 10 to 15% to the upside. Those type of gaps tend to, or what's called breakaway gaps, and they tend to be filled, not to get back to those prices for a very long time. But just looking at the chart, you could see several gaps. I mean, you have one here that hasn't been filled. You have one here from 24,575 to 26,100. You have a gap below around 18,720 to around 19,015. There's just several gaps to the downside that just haven't been filled. You have a gap all the way down here at 9,660 to around 9,900. So there's several areas where the prices has created a gap and just hasn't filled. And you could see even recently, we had a gap back in July, when you finally broke the downtrend of that consolidation. We were consolidating. We finally broke back up and made a newer high. It ran from July to November. You made a gap at around 33,025 to 34,285. From the November to January sell-off, I mean, this wick closed that gap pretty much almost perfectly. And so you could see just on this chart that those gaps tend to be filled. And so if we do, have developed gaps to the downside, odds are, looking at the price action, looking at the long-term price action, looking at the weekly, monthly charts. I've been stressing ever since I, came to this channel, been doing market analysis videos, that we do have a potential double top forming. That's a bearish pattern. You have these gaps. This could be, the catalyst to fill those gaps. And so that is something that, I wanted to point out that you need to be aware of. The CME is the, chart that, is the instrument that institutions use to, buy and sell BTC. A lot of institutions have came in this market since the fall of 2020. And to me, they're really the ones that are dictating the price now. That's why you don't see much price action movement on the weekends as you traditionally used to see with Bitcoin, when, there was, traders and investors, well, mostly traders, in this market, where you would get wild, weekend swings of, sometimes 10 to, 15% during the weekend. just don't have that volume, because those traders aren't the ones that are controlling this market anymore. So this is just something I've been watching, something that I just noticed has been extremely important when looking at the BTC price now. These institutions, I've stated on several market analysis videos, like institutions run this market now. Wall Street runs this market now, and combined with that weekly bearish divergence that it's pretty much played out, but it's still, you can still argue it's playing out in that monthly RSI bearish divergence that's playing out. The odds are you're going to see these gaps filled to the downside. It just really doesn't look bullish for Bitcoin. You had to set up the potential pivot, and you just failing. The same thing goes with Ethereum. Right now, we had that symmetric triangle, and you had the potential measure move to near the all-time highs. Bitcoin rolled over. And I told you, if Bitcoin rolls over, Ethereum's just going to follow. Unfortunately, you have broken that symmetric triangle. You're broken back into the pattern. And if you can see right now, you're testing that symmetric triangle as resistance. It just doesn't look good. It looks like we're going to see more, negative price action to the downside. Again, you do have hidden bullish divergence on the daily, but you're not getting any positive reaction to the upside. You hit this trend line, you bounced off of it, and you just had a lukewarm, another lower high type of move from your previous high. So there's just no demand here. There's no buyers here, it seems like. And we're going to probably be testing, these last, these lows. A lot that has to do with something I've been mentioning in the last couple of videos, looking at the, Treasury market. I'm putting this out on Twitter that we potentially did have some, bearish divergence on your yields on a 4-hour, and it's played out, and it was just a weak sell-off. And we kind of did rally again, and kind of trying to confirm a lower high right now on the 4-hour. You're kind of developing a rising wedge on the 4-hour, which would be positive, not only for crypto but for equities as well. But it's something got to be patient with, and see if we do start, we break this pattern and we start to, get some positive yields, and maybe that will get the bulls back in and get those crypto prices up, and also equity prices. But other than that, 4-hour bear divergence, on the daily, it was really just overbought on your RSI. You probably would just consolidate, start to flag, get some negative momentum on your daily, and probably have another impulse up. You really want to look at these yields from a longer term perspective. When I first introduced this chart on this channel, I was telling you that the next real resistance was 3%. We got close. We got the 2.9% last week. We didn't test the high yet, but we're kind of close to that resistance. I don't see why we wouldn't test that high. I'm expecting to see higher yields. Higher yields, I explained a few videos ago, means that's terrible for risk on assets. And the same thing with your dollar. Putting this out, a lot of people have that narrative that the dollar is it's gonna die. It's over. We're gonna have hyperinflation. And since January of 2021, the dollar has been bullish. And I told you, we were consolidating bullishly after the impulse up. This is the monthly chart. This is taking a long time, but I was expecting just at the bare minimum to test, this trend line. Around like 102.50 area to round up, and you could see it's just consolidating bullishly, and probably within whether this month or next month, we're probably going to be testing that top trend line. And if you break it, you're going to be seeing higher prices within the dollar, and that's not bullish for equities or crypto. This is why I stress, don't listen to narratives. Pay attention more to the charts. I'm expecting higher prices, people to run into the dollar, and that's just not bullish for any risk on asset. And S&P has reflected that. Was mentioning last week that looking at the shorter time frames, that we could have been, maybe we were consolidating. That consolidation failed, and we are back close to those lows. And I'm telling you, if we break those lows, we're going to be seeing, the S&P testing your next supports. Probably, I was saying around 39, I believe 39.50 area. There's, a lot of these charts are not looking bullish. We had a terrible Friday, very terrible week on S&P. I'm expecting to see lower prices. There's just nothing, looking at, just the price action, look at your indicators. You're just building more negative momentum on your MACD. Your RSI, it's at 41. You not in oversold territory. You have a lot more room to, before you get to oversold territory, there's just not much of a bullish case. Same, you had a tremendous, well, not tremendous, but you did have a very bad price action last week with gold and silver. Early in the week, it was looking very strong, and now it's starting to again look like BTC and Ethereum. You had this symmetric triangle that you broke out of bullishly. You consolidated, just like Bitcoin, and now you're starting to break down. You haven't broken back into the pattern yet, but it's kind of looking similar. I was very optimistic that we could break these highs, but unfortunately, we started to break down more. The dollar started to gain more value. As interest rates starts to spike again. And, it's going to affect every market negatively, any risk on, even your safety assets, because now the safety is not running into gold and silver. The safety is running into, the dollar. And you really need a pivot, and you need to break these highs. Maybe the thing you hope for is just more sideways price action, and, more like maybe just continue to make higher lows on your lower time frames and have some more accumulation. But you're going to have to at some point break these highs. You don't want to start making, really don't want to break these lows. Around like 1915. Across the board, it's just looking terrible right now. And I just wanted to brush on before I get out of here. I actually saw the video that Quick the Blood did with Reggie Militant, and he was explaining how inflation was a supply side inflation, where there's not enough supply, so the prices of goods and services rise, and not a demand side inflation, where the economy is just humming. There's so much money in the system that people are just spending their capital on assets. The reason why I'm bringing this up, because this was kind of the same argument I was mentioning to people when it came to this whole inflation debate. When you have inflation, you need two elements. You need not only money printing, but you also need money velocity. And so there is a chart that you can actually chart that velocity. It's called an M2V, and it's a line chart, but it's definitely something I've been watching for, ever since the Fed came out and start, announcing that they were going to print all this money to support the economy during COVID. You could look at this chart and you could see that the money velocity is actually near its all-time lows. What is interesting in this chart, though, I don't know if you could, do traditional technical analysis on it. If you do look at the daily, you are creating some bullish divergence. You're at a low. I don't know how much lower you can go. Maybe if, the money velocity starts to, trend up, which honestly, looking at this chart, I don't think you can go any lower. You could start seeing that demand side inflation, and you could start to see inflation the demand side inflation start to wreak havoc within the economy. In that interview, he was arguing that we're more in a stagflation environment. I tend to somewhat agree. It was a very interesting interview. I think it's something, if you didn't check it out, it's something you should check out. Check out a lot of the content that's on the channel, with Trek, with, Dr. Littlejohn. They give, a unique perspective, a lot of valuable information, along with Quick the Blood. And, I just wanted to mention that. And until the next video, and I hope you're staying safe out there. These YouTube streets are, are getting real crazy out there. But until next time, peace.